evening, good afternoon, good morning, wherever you are. Thanks for joining so plenty to the, I don't know, 14th live session meanwhile. It's pretty crazy how things are going. Same on the charts. We don't have that many questions in the forum, in the thread forum, whatever, in the live stream questions. I go through those that we have. So if you have like anything on the fly, things to look at, questions of what kind, decide, give me the best entry, what is hello? I mean, we try to figure that out as the charts develop, but yeah, for educational purposes and such, or maybe looking at different charts together and finding good trades there. So, or whatever comes up to your mind, even if it's like how to manage your risk, what is RSI, what are other indicators, what is good stuff to look at.
He's going to say, yeah,
You know,
she's 9 months out.
whatever questions you have or ideas, topics you want to talk about, just shoot. Post it in the chat or speak up. You don't need to raise your hands. Just talk through me in case, and or anybody else, and then we work ourselves through it. Okay. So, despite the charts being obviously super devastated already, I guess it's also a good moment to pick up on a topic that got reposted today, which is basically like layering into positions. Because that's like the best moment in the market to talk about this. I also put that question there a while ago, but wanted to wait a bit until there's a better moment in the market, which is today, if you ask me. So in the live stream questions forum, we had this also by Kavix asked how to scaling entries and layout profits, basically. So scaling in entries is something I would rather focus a bit more on because TPing is a different kind of skill and it also depends on what the chart is doing afterwards. I mean, you can set specific exits just based on the FIPS. So I don't know if we just take the most recent hour investment and you say, okay, you take this long as a layer and you want to start TPing here, then that is obviously something. And then have like higher targets from other goals you have in mind or prices. But in a general sense, that's more the thing I wanted to talk about. So how do I layer into positions basically, or in best case? I'm not perfect. I could improve a lot on my execution layer. But as a base principle, there are like very easy and understandable approaches how one should do. And I like to go with a fictional example of like $10,000 positions. Let's say you have your collateral and you feel very good with trading $10,000 positions in total, and then just let the chart develop, and you're not scared of getting liquidated or whatever. It's not like 10,000 is already like tap dancing on, yeah, on the next wick to either die or not because you're over leveraged. Let's say you have a certain account size or you are not leveraging at all and you're even only trading spot or whatever, or 2x's or so, like reasonable stuff. So if you have like the desire to have a total position size of, let's say, $10,000, and yeah, you obviously don't want to shoot all the dry powder in one go. If you're scalping or if you wait for the absolute low, that's definitely possible. But if you're like, okay, well, I'm not sure what's going to happen, and that's also like the vibe already today, we had hit 149, which is where I hit my first limit order, which is my first layer. I have more lower, and that's basically also how I would talk about it today, because some people may have already shoot this desired 10,000 position at 200 and are like under pain now because we barely went to it and rejected already, and now you're underwater and starting to sweat. And so maybe this is a topic for you also, how you could better approach layering into a position rather than trying to nail the absolute big low every time and then shoot everything in one go and then make the worst decisions afterwards, which is doubling and tripling down against all your plans up front. So we have like basic do's and don'ts while layering in. A clear don't is, yeah, over position sizing until you cannot sleep anymore, or your tummy feels really weird and you are not following any of your plans from up front just because you want to make sure you're like, yeah, okay, yeah, it'll be all right. I got already 10,000 in, but now it falls another $5, so I add 10,000 to optimize my entry, but it keeps falling and falling. It's like also the perfect chart to make a case for these don'ts, because you could have Skype those and, long these and exit here and whatever, or Skype somewhere in between here. Everything possible, but if you're like trying to approach this market correction, it's not a flush anymore only. Obviously, it's a larger market correction in total. If you are looking for a swing position, you don't want to exhaust all your collateral or desired position size in one go at the first wick that seems already like juicy. But you want to take your time, let the market play its thing out, and make a plan. Like best moment while things were like not so optimistic already to go back up was the last moment, or the first last moment was basically when we couldn't even go to 270 here, and it was like super clear that we're going much lower, which we already did. And this is like a good moment to make those plans up front, those layered plans, and then stick to them. And how I basically do, let's talk, well, think again about the $10,000 size position. So let me get a fresh chart so the lines are not like super annoying. So we already all know the numbers from the chat, we all talked about it endlessly, what are good entries and so on. So I guess it's fair to stick to those as an example for layering into that position. We could look to the left again and maybe do, I guess, numbers that were spoken about is certainly like 194. So if you have like, again, the $10,000 position as intention, then you could start, for example, that's how I like to do it at least. Middle, right, text, yellow, zack. So that's my first layer that just hit. Could it moon from here? Is the low in? It's possible. That's why I'm layering in. It's not perfectly certain where the low is going to be right now, and I feel comfortable starting along from here. And if it already goes to 217 or even higher from here, then I'm in profit and I'm happy. Or if I want to take a partial profit and add it back, and maybe as I build support here, I can just like take out 1,000 here, put it back in here, and if they keep ranging, do this game non-stop until they decide to go higher, then I leave the range with a lesser position size, or if they go lower, then they will go to my second layer, which is currently sitting at like 192. Same size, and again, now we have like consumed 4,000, let's say, both hit, and we're not in the profit in the money already, and could TP just do the whole game again from the same entry. Let's say it would just go here, and I do nothing, neither TPing, neither selling, whatever, I just let it run, and it hits here, then I have a total position size of 4,000, and I'm aiming to build for 10,000. So what happens if the price just goes here? I don't know. Let's say it just falls here, wicks exactly here, and then does this, and then runs up. Then same story. I have a larger position. My entry is even a bit better. It would average out to like 193, given that, yeah, the average of same size between 149 and 192 is 193. So my entry is already a bit better. I still have dry powder left for anything that may happen. And this anything that may happen is still this very highly desirable 189.3 entry from all those giga high time frames. So that's
Hey, Blue.
where we'll, yes,
Sorry,
please.
sorry to interrupt, but apparently we all have are hearing mic problems, and it's a common thing if you look at the chat. I don't know if it's you or it's Discord, but maybe it's worth checking in because it's very interesting, but also very hard to follow.
Oh, you can hear me. Shit. Okay.
Yeah, it gets very croppy.
Thanks for checking in because I didn't know. Give me a second.
Sure.
Test. 1, 2, 3. Hello.
No, we can hear you, but if you talk for like 30 seconds, sometimes it interrupts. We hear your voice like a droid from Star Wars, and then it's block, and then you speed up. So that has been so far.
I have fiber cable right into my living room, but the weather is so good. Maybe the distribution is not so doing well at the moment.
Did you do something? Because right now we can hear you all right.
Yeah,
now.
I changed from my headphones channel. It's streaming through. Okay, just interrupt me again, please, when it starts sucking again. So
sure, thank you.
Yeah, likewise. Yeah, I don't know if it makes sense to just restart with what I explained, but
to me, it would be great if we could restart. Yeah, a little bit. Thank you.
Okay. So let's say you trade $10,000 positions, being comfortable, not over leveraged, not sweating, not lacking sleep, etc. And your desire is to leave or find the low as close as possible with your long position for such a obvious swing trade we are building into. We are not talking little scalps anymore. We are not talking bounces anymore, like all the stuff we have like here, you bounce around, dim, until you eventually moon away. What's happening here is looking for swing positions. At least that's what I'm doing. So my desire is not so much into nailing the absolute bottom. My desire is make sure I have a position size that I'm aiming for, that I like to let ride, and then let the chart just do its thing, you know. If you can have a $10,000 position, so that's a fictional example I'm just explaining, it's different for everybody. Some monopoly back people, that's like shrimp money and they don't even stand up for this. And for others, that's already retirement money. So let's just stay to the fictional example of 10,000 here. You got to choose your total desirable position size for yourself and find that out for yourself. I'm just talking about the ideas about layering into your desired position size. If you are like me trying to find a good swing long low or as close to the low and just let it run and then let the market do whatever it wants, maybe play around a bit with your position until eventually things go up again. So what's the idea here? I just marked the layers I've chosen for myself, given all the numbers we're already talking about since yesterday. And yeah, you know that from the chat. If you didn't know, those are at least 3 important numbers for me. Maybe others have different numbers, but given the extremely higher time frame closures like this one, and we have more of them. I don't know, Sindot maybe can later share a CSV file again. I don't want to run through every 3-digit daily, but we have a lot of 3-digit daily engulfments right at this price. We already have the 18-week engulfment from here, which activated already at 213. So everything down here is basically also just a refined entry from this long here. So there's so much support and so much upwards pressure that I am less interested in nailing the absolute bottom. I mean, to be fair, I just did with this wick and have my first layer hit here, but I don't think that is the low. It's just where I feel like comfortable building a position. And if the market for some reason decides to give a little relief rally already, then I have a long that's not as big as I would like to, but it's better than nothing, you know, and that's a bit the idea for layering in. And then I can play around it. So like TPing here at 200 or any of these resistances or something like here when it tries to retest the break level here. I could TP like half of that already. Maybe I'll do it. I didn't decide that yet. It depends a bit on how the chart develops. But if it does something like this, I could TP half. And if it goes back here, I can add it back. And then I have the 2000 size again. But I already took some profits. And, you know, we don't know what's happening yet. It could do something like this like for a very long time. It's not like the first time the chart would do this. So that's how you can play ranges. So that's one option. I like to do this, especially when you already hit the low. You can just TP on resistances. You can TP on something like this 1 hour engulfment here. I mean, it's a high risk one. It's just a single candle, so you wouldn't really want to take it. But we already know that the price will eventually go here. And if it does, you could perfectly take out half of this long and then just wait. And if it goes higher, you run with less money into the higher prices or with less position size. But yeah, since it's a game of chances and profits is better than losses, you know, those things can add up if you're not like trying to hit always the absolute low with 50x and all your account size, yeah, that's most likely prone to fail and get you wrecked. So if you can make steady gains, that's a decent approach. But if you say like, fuck this, I just want to hit entries as the price falls, then that's also a viable approach, talking about a swing position. And since I'm not doing something right now with that entry, as the price is here, there's nothing to TP here for me. It's just following my plan, which is waiting to hit this, double my position size. Average entry will be then 193. And then wait again. If it runs from here or just trolls me and all of us, because I know many of you have like 189 long desires now. If it does something like this and then whoop, this it could happen. Wouldn't be the first time to see this. Then I still got a long in. I have to double the size. I can do the same as what I just talked about on the first layer. I can let the chart develop, check if it runs super fast and overheats, and most likely just wrecking the late shorts here in this area while running into this resistance here. So that's like a could be a good area for a quick run up, kill the late shorts, and then before it, yeah, then goes actually lower, because then the short time frame cooled off a bit, indicators reset a bit, and this then opens up the chance to go lower. Doesn't need to happen, but this is something that certainly happens often enough. That's usually also a
One
reason why
question,
you get these.
Lou.
Yeah, sure.
In this case, where there is still uncertainty, you're trying to layer in some long entries. But what is your leverage? You are trying to, since there is still volatility and we could go lower. From what I've understood, you are trying to place a low leverage position, stacking it up to not miss out. But are you? So, and you also mentioned about taking profits in some resistance level, partial or whole. But in your strategy, do you also have similar positions like spot positions, but with very low leverage, in order to make the long run for more than 2, 3, 4, 5 days, or do you usually prefer going for shorter time frame trades? I don't know if it was clear.
Yeah. There were like multiple questions. So let's start with the last one. Because I kind of said that already, but if that wasn't clear,
Oh,
I'm not
I'm sorry.
looking. No worries. It's all good.
Mhm.
Sometimes I just jump between topics and then it gets confusing. So I'm not looking here for a scalp for just quick money, like quick rejection of a tiny fib. I'm
Right.
actually actively looking for a larger swing play that runs longer and that has the more sophisticated layering in. You can layer into scalps, but I don't really like to do that a lot. And then position sizing is also different. If we talk scalps versus what I do now, it's probably only 1/10 the size, and then you have also other layering in capabilities. But I guess it gets a bit too complex now. So what I'm talking or trying to talk about here is something that runs for longer, and you are not dying on a hill or lacking sleep or can't listen to your girlfriend anymore because you can only think about your trade all the time. Then she's like, why don't you listen to me? I'm talking about something like this where you're layering into something you feel comfortable about. If it runs against you, but eventually the market will turn. Is it 180? Is it 170? My God, who really knows? Does it even reach 189? That's what we're trying to figure out as the chart dies. But I feel comfortable with all the things there are in the chart, with all the bullishness, with everything that's coming, going into October and whatever, to start a strong swing long from here that I can just let run, because for me personally, fees are not high, which also leads to the other question you ask, how much leverage I'm using. I have a cross margin account in Binance, so all my trades are backed by my whole account. If you're trading on Jupiter, you have to define like leverage, like 2x, 1x, 3x, where 1x is basically spot, but you can do that, or 1.1 is, I guess, the minimum on Jupiter, which is kind of spot. Then, yeah, you could do that. Maybe if you're also approaching a large size thing here, then you should probably do only also like a 3x, maybe only a 2x, and give yourself some room to that the chart just maybe even does this. Oh my God, panic, which is also like a fantastic buying opportunity. And which would lead me to a later topic, which is like have a cushion for if something like this blast absolutely through and offers like a once in a quarter, once in a half year buying opportunity, because that can happen. We did see that.
Like at 95, right?
Yeah. Like at 95 or like 120 or so, something like that. Yeah, this year also.
I made a colleague of mine buy a huge spot position at 95, but I didn't execute it myself. So
yeah, same. He just
happened.
told me, oh, I know at the bottom because of you. And I was, yeah, good for you. I was on a hiatus and didn't trade.
Yeah.
But like, if we go, just a quick example for that, if you would have traded this and you were like looking to layer in on a chart like this, you could have had the same approach, you'd be like, yeah, let's not look at the holes for the moment. It takes too long. But let's say you have something like here, like obvious layer in positions, and then something like, let's say this. Yeah, that aligns really well. So let's say you have these 3 layers and then the chart develops. You are fully deployed and you're, go a bit quicker. Play. So now your first layer hit. Now you could play around a bit, like the things I talked before, maybe take out half again, wait what the chart
Take
does.
a little bit, yeah.
Yeah, TP a bit. Now it didn't hit your desired layer again. Now it runs even further. Now FOMO kicks in. No, my position isn't developed yet. What am I going to do? I'm going to miss out. But charts doing chart things. Now your layer hit again. Even your second layer did hit. Now you have the double size, but you also TP'd maybe eventually something somewhere. So now you're leaving at least with double size and also some profits taking in between.
If you take profit from the first uptrend, do you still enter the first level again?
Yeah, if I'm actually just playing with a swing position that I want to carry out for an indefinite time, talking about new highs or at least a lower high on a larger time frame, then yeah. If that answers your question.
Okay.
So also same again. Could already TP some. Already always depends a bit on the chart. I mean, now we're hindsight trading. I can say, oh, I would have TP'd here and here, but as it's always different if chart develops. So just looking at the resistance from the left, it's totally fine to TP something here or even on the high to the left. And if it runs a bit higher, then it is what it is. Depends a bit also on the indicators to look at, like RSI. I don't know if 50-minute was super overheated here or here already, then I would have also TP'd into this resistance, and same here. So cannot say plainly just looking at hindsight chart development. It's more general idea how you are managing a
But
position actively like this.
you position.
Sorry? Yeah.
But you position yourself based on a higher time frame analysis, right? And then you use the hourly or the minute to position, right? To select the target.
Yeah.
Waiting for a swing or a turn of the trend, let's say.
Yeah, exactly. And then playing as the chart develops on partial TPs and then add backs, partial TPs. I guess your guys also heard that a lot of Sin in the videos lately with this reposition where it was to revisit the break level while hanging in the low prices. And then he was like, yeah, I'm just TP halfway through until it hits the break. If it goes back below, I add back. Then halfway through, I TP half until it hits the break and then fully TP. So that's basically the perfectly same idea. It's a scalp in this case, or on his position size is probably huge amounts. But yeah, the idea.
The Cybertruck trade.
Yeah, it's like chicken farm for chicken tendies trades. Anyways, the base idea doesn't change for this. You have a target. You have a desire for your position. It doesn't need to be always like the final number. If it's a scalp or a tiny swing down, swing up thing like here, I don't know. Sure, you're better off if you have like clear numbers. If you are approaching something like I'm trying to build into at the moment, which is a larger swing for what's to come in the market. I know narratives are garbage, or news, but I'm still, and I also observed what the volumes did since the CME launch of Solana, and all the feeds gone up a lot. So money is coming definitely, and big players are feasting on these long liquidations to position themselves. So personally, I think the option release early October and the ETF release somewhere in October, I don't know exactly when they all get approved, and the second rate cuts end of October, all of these three huge drivers for more upside. And we can already see it in the money flow charts I shared in the last weeks that we got the breakouts there. So yeah, money is definitely looking here, and they're stacking like mad, and they're feasting on this dip like mad.
Yeah, they're loading up on consumers basically.
Yeah. And so
Do you use some kind of whale indicator or something?
No, just raw spot aggregate spot asset thing. Wait a second, I can share that. I'll remind me about it later. I share it then. Just let's finish this example
sure.
here, okay?
Sure.
So if the chart develops, now you're still like in your double position, and then now there was the third hit. I mean, it was hindsight, but just by looking at what is left, these were valid entries, if you ask me. So now your position is fully built. And now you want to wait. Just wait. And now the chart runs against you, and now you're like, oh shit, I fucked up. And
What about moving your stop losses as it hits some break levels or resistances? As Sink mentioned, he said that he would move his stop losses after a partial take profit, right, to at least break even with the previous take profit one.
Yeah, you can do that. I guess he does that for the Skypes and so on.
But not for the swings.
Yeah, exactly. I wouldn't. If you read everything in the chat that was there, I don't know if you did, and otherwise I just rephrase what he said while those things were happening. When he had those longs to 247, and now has this long to 289 still open, I guess. He doesn't mind. The chart will go there eventually. We are only just looking for refined entries here, so it's different per trade what you are dealing with, and how you want to manage it. If it's a scalp and you do this, let's say this example here again, you're not building a swing here, you are just scalping. If you partial TP here and you add back here and partial TP here and whatever, and then your break even starts to go lower and lower while your entry doesn't change because you add at the same level, your entry doesn't change, but for all the partial TPs, your break even goes lower. And you can either choose to not add back and only set the stop loss at your entry and say, yeah, I don't give a fuck anymore. I don't want to trade this anymore. I'm good, kind of thing. That's also like, I mean, we are human. It's not like we have to perfect every trade or there's something with work going on or you're bound to bounce off or going into the airplane, whatever. You don't want that trade anymore. You just that's your goal for that running trade, for that running Skype, and then you put that SL just on the entry, and everything between entry and your break even is already raw profit. You cannot lose anymore.
Right.
But if it's like the swing trade approach and you still do these plays and your break even keeps going lower and lower while you partial TP, add back, partial TP, add back, whatever, and then it runs against you, you don't want to be in a position where you start to get a heart attack because price goes here, or here, or here. Not even here. Not even here.
But at 126, if you had more capacity or more capital to deploy, would you add it with a better leverage or with a higher leverage if you are doing a swing trade? For instance, I usually do, since I'm a newbie, I do 3x on Jupiter, and I play with just a portion of my Solana. But I always leave the spot Solana that I have in case of emergency, and I play with a basket of I don't know. Let's say some numbers. Let's say I have a tradable bag of 50 Solana, and I have some trade setups where I say, okay, I enter with 10 Solana at leverage 3x, and the lower I go, the higher the confidence of putting into of layering in, right? But if I fuck up my my swing position, like 145, 141, 136. At 136, maybe I get in with 20 Solana at 3x. And then we go to 124. And there I say, okay, I'll blast my last 10 Solana at a leverage of 20, 50, whatever. But it's kind of gambling, right? It's like a desperate move to try to retake your profits, unless you have a high confidence in okay, the swing is happening. maybe I waited. I just need to wait, right? As you also said. But in this specific case, in your experience, or what is the right thing, right? The market takes and the market gives. But in this case, I know it's a broader philosophical question, but I'm just trying to understand what you usually do if something like this happens and you're trapped.
Yeah, the honest truth is, besides that shit happens, is you don't want to bring yourself into a position like this ever, which is like, haha, you don't say so. Like, obviously, but yeah, then it happens anyways.
Yeah.
That brings me actually to the subtopic I was also trying to address. When you have like your fully desired position here, this is hindsight again. Obviously, this was a low. If I run the chart now, I'm pretty sure it didn't go lower. Or did it? 126, I remember, was the low. Something like that, at least. At least it didn't go much lower. Maybe 124 something. Yeah, whatever. It's like only $10 away from your last layer. So if you have like, okay, I guess it will run now. I'm pretty sure. If you have these layers, like again, let's say 2,000, 2,000, and 6,000 for the desired 10,000.
Yeah.
Let's ignore for a moment the break even and the partial TPs and whatever, because that's already checked in profits. We're just talking about the raw entry, which could still blow up if it goes against you. If you have a 3x here, 2,000, 2,000, it's like in the middle, and then 6,000 again, lower here. So the entry will be somewhere like here. I guess somewhere like here.
39. Let's say 39.
Yeah, let's say 39. So if you have like a 3x, your absolute blowout price would be even below or right at the absolute market low, So if you just keep adding the same leverage things and you have more cushion to play with, you can do that. You can play the same desires of layering in and split them up into 4 layers. And you say, I only target half of the size or 3/4 of the size, 60% of the size when I hit my first 3. And for that tiny chance the market fucks everyone, I always want that big cushion under my mattress to add far away from my entry or $10 below my entry, just in case, which is something like what happened here. But you don't want to rescue your trades with money you are actually not willing to lose,
Fair enough.
But if you do that, because I did that myself, and probably many people did, just because we are stubborn and we don't want to give up and even improve your entry or be greedy and improve your profits, whatever. Let's say you nailed your emergency money somewhere here in that area. Not saying we all catch the wick low, but anywhere here, maybe you got it. You would probably double the size at least, because that's when emergency money makes even sense. Because if you have a $10,000 position here, I really don't want to advertise of conditioning yourself to do that. It should be really just a holy shit, what the fuck, I didn't expect that, and that's the money I need to use now to get a free out of jail card, hopefully. So please don't condition yourself to think it's a good strategy to always have in mind, I got that emergency money and I can use it every time. That shouldn't be like your thought process. But let's say you did in this case. You have 10,000 already stacked up here. Your entry is somewhere here, and it goes here, and you add 10,000 again. That will obviously go again like half the way down between your new adding and your prior position. So that's somewhere like probably 132. Yeah, let's mark that also.
Yeah,
So
if
that's
the leverage is still the same and not
exactly.
higher, right?
Yeah, exactly. Yeah. Since I'm trading on Binance, I'm not really applying leverage in the same sense in it working on Jupiter, you know. So if I
Yeah.
talk position changes, for me it's like raw money changing against your total position size. It's also how it works in the background in Jupiter if you do the math. But it's on the interface, you have these 3x numbers and whatever, and you add 2x or you add 20x to your 3x, but it's all just, yeah, fancy UI. What you actually do is if you have 3x of 1000, which is 3000, and you add 20x of 1000, then you add just $20,000 to your $3,000 position. So that's the actual math behind it. So
Makes sense. So would you
now,
say that the 126.27 level, it could be relatable to the 172 level that it's a higher time frame support in the current condition, meaning that I think we are all targeting that 189, right? Or also 182 was another support. But the higher time frame was 170 something for whatever I gathered.
yeah,
But
give me a moment to wrap this up
Sure.
quickly because we didn't finish, and then otherwise I get confused. Sorry. So if your position is then here now, then you need the absolute discipline to take out your emergency money as soon as you go break even on your entry. Don't fuck around then. Don't be like, yeah, I got the mega trade and my emergency money actually turned into future mega profits. That's perfectly on the don't list. You don't want to do that. You want to have that emergency money back. You don't want to ride it in case, I don't know, Russia sends nukes and the chart does fucking this, you know, and then not only your base size is there in the dumpster fire, but also your emergency money. So this is hindsight trading where, you know, there are reasons this happened and it's perfectly fine. It bounced here. You could have, added here from all the support to the left. It's okay. But yeah, obviously it's hindsight right now. So I can only preach if you do something like this and your trade runs to your entry or break even, take out that emergency money immediately and then take it as like, what a nice gift by the market. Maybe you did something right because your base idea of starting all this was already pretty good, but then the market wanted to take everybody else out. You were brave enough to use your emergency money and you got an absolute super awesome entry here. Then you also deserve the gains that are to come, but as you are also managing your risk, you don't want to hold all your emergency money within that trade. If you're greedy and TP that a little bit higher, I understand that. I did those things, I understand it all, but I got to talk about it differently. If you're disciplined, you would take all that emergency money out at your entry again and be like, yes, man, now I have a really nice entry, same size, lower entry, and now I can ride it and see what happens. And then the market gives for your discipline because as far as I know, it is mostly then running up into the right from here on average.
Do you TP the money when you reach what is it called?
break even? No.
Can you repeat that again? Sorry.
If you use the emergency money to do entry, do you take profits when you reach break even?
Yeah, exactly. Or the entry.
Yeah, okay.
Yeah, break even could be lower, you know, because if we consider for the partial profits from before, then your break even is maybe somewhere here. So, but basically at your entry, if you use emergency money,
Yeah, okay.
always take it out at entry.
Okay.
So, questions to this specifically, then otherwise I would ask you to repeat your question again from before about that other levels that we are looking
Was
at.
it
because now I'm not-
to make it current? No problem. Was it to make it current with the 172 example to make it at the current market? Or maybe we had a pending question about whale indicator made by someone else. I kept
yeah.
it in my head.
Yeah, thanks.
Yeah, maybe we can get to that before. Yeah.
Yeah. Good point. Just need to change the screen share then. Give me a second. It's not really whale indicator. It's basically just so not end the stream, but where is it? Stream switch. So this is VeloCharts. I like that app a lot. It's free. It has also paid stuff. They build a lot of their own indicators. Didn't look at those yet because I just like what they offer here. There's also a tutorial for this website how you can set up dashboards here. So this is my dashboard for Solana, or basically for all assets. And what this dashboard shows is price, open interest, which is basically leverage in the market. And we can see this very beautiful breakdown here, and then most likely going somewhere here for the open interest. So that's where I see the doom wick. Maybe go a bit below, who knows? But yeah, we have more room to fall. But actual question about buying, and yeah, people feasting on the dip is coming, in my opinion, from this breakout here. So we have aggregated spot volume. It's a Velo indicator, but it's part of the freemium version. And it basically aggregates you all buying. In this case, I only checked on Binance because that's where the largest volume is, but you can take all these 4 exchanges into account, but usually, yeah, Binance is where the action is, so I'm good to use this. And yeah, we got a pretty significant breakout on the money flow here. It basically calculates the difference between market order buying and market order selling. It's not limit orders waiting in the order book that are getting filled. It's who's pressing actively, yeah, buy now or sell now. And those hold against
Buy
each
at
other.
market level, right?
Exactly.
Buying at market level.
Exactly.
Okay. From the order books, it's an aggregation from the order books of the many exchanges, right?
Yeah, in this case, Binance only, but you can check in all the other relevant exchanges if you want to. And you can see here, same charting, works on like all data, we have change of character and a breakout in the money flow. We found footing here. You can even see how it develops basically, even like multi-tapping supports. That's also when you can, if congruent with price, find like the next lows, if you be like here, that was a low, it tapped on the money flow, the low, then the next low was here, tapped on the money flow, the low, and so on and so on. And then eventually it started to take off and break out.
But how does this affect your decision making? For instance, that triple confirmation on open interest, aggregated spot volume, and futures that you just highlighted.
Yeah, that's a question with multiple answers because I thought more for open interest about, okay, it's so over leveraged, things have to come down soon, especially here. If I zoom in a bit, and I try to understand it a bit better or apply it a bit better, that it's more a forecast and truth of price movement rather than, yeah, okay, if we have a lot of leverage, it needs to crash, which is seemingly not what happened when we went here. We had a new all-time high already, because if we go to the left and take the FTX highs, there was less than one tenth, like less than 10% of the current leverage in the market. So it's absolutely nuts how many players are meanwhile playing in crypto that we are not even on all-time high and have already reached 16 times the leverage in the market. So when we reached this level here, I was like, yeah, new all-time high, things eventually have to come down because there's just too much leverage. But yeah, here you see what actually happens, so I'm not using it as an like, okay, my decision changes because of open interest. It's more like I try to understand it still better, observe it, and try to make better conclusions with it in confluence with other stuff rather than saying, okay, now I take this as a decision changing factor due to open interest. I learned that you can actually chart it very well, so that works. As you can see here, this larger trend where open interest just tap danced on and then fucked around with, and that's also where price fucked around, and then eventually it just rolls over and is about to hit this next trend line. So I will work a bit more with this. I'm not saying I take big conclusions with it, with this, but what I'm taking conclusions with is money flow, because that's actually where the money is at. And you can have also bearish and bullish divergences between money flow and price. There's even indirectly an indicator on TradingView for this. It's called OBV, and this stands for on balance volume, where you can see the same data in a different way. I could go through the indicator probably in another session. I will note that down because it would make the scale of the session today a bit too large. But for this single instance, for running for raw inflows and outflows of people actively selling their spot positions, actively buying into spot positions, it's like a huge breakout here. We haven't had a change of character on the money flow for Solana really since the 295 top, because that's also where the peak euphoria hit. You can see how those money flow levels were going mostly to the right, and then on the last peak it shot up here. And ever since then it's basically just accumulation, distribution, accumulation at the same time, to be fair. So it's not always a clear overlap, but I guess it's fair to say that this whole range here going hand in hand with price was more or less a huge accumulation phase, and now that they finished accumulating and we are going into the end of the cycle, they are trying to mark up the price and shake out the people now. Let's see how low it goes to shake out more participants. But yeah, you can clearly see how
the inflow is coming.
Large money exactly is coming and changing the character, taking out the last high, which was never done since, as we've seen. And funny enough, I was just thinking today during the walk that, yeah, money flow, cool. We're almost like diamond hands on Solana when it was like here because people were like buying. But then I was like, yeah, no. Usually the worst players come at the lowest prices, and that's when they sell. And that's, yeah, exactly what's happening in this exact
Happened, yeah.
moment in time. If you zoom in, go to the 1 hour. The lines, unfortunately, they are not very precise on this app. I constantly have to reposition them, but whatever. So you can see like most of the panic is happening right now, and this is confluence you want to find in the money flow. These are things that can give you huge conviction to take a position, because this is basically starting to build bullish divergences, because you have large outflows, you have panic selling starting, like in tiny amounts of time, you outflow 300,000 Solana of raw spot selling. Oh, and as a side note, sorry for rambling, but there's a lot to learn here. And interrupt me anytime if it's not something not clear. But aggregated spot volume means if you have, let's say somebody hits market order buy 1,000 SOL, and another entity hits market order sell directly, both on the market. Then the aggregate spot volume would be 0, because the delta between all the selling and buying is 1,000 of 2 times 1,000 in and out is 0. So if we look at 300,000 down, then it means there was X amount of buying and selling, but the total delta between those was actually 300,000 were in total selling more actively. If that's understandable. If not, please ask.
Yeah, is it millions in Solana or millions in dollars?
Solana assets is always asset.
Okay.
Yeah, so 300,000 SOL were market orders sold more than bought between this little peak here and this running low. And
so there was a delta increase. The delta, the difference is factored into this aggregated spot volume,
yeah,
basically, right?
yeah.
Okay.
Aggregated is basically a fancy word for summed up all buying and selling, and the difference is what is the change of how the graph develops. And,
can I add a question on the open interest, or would you also analyze the aggregated open interest with the liquidation heat map on CoinGecko? Does it also help, or since the open interest might be a derivation in time of the liquidation map, maybe you don't need to check it?
what do you mean? You mean CoinGlass or?
Oh, sorry, CoinGlass. Yeah.
And how to match the heat maps of leverage or liquidation price points versus open interest, or
Yeah.
what is the question? Sorry, cannot follow.
Yeah, no, it was that. How do you maybe analyze both information about the liquidation and the open interest?
Yeah.
Since we're talking about leverage.
Different data points. So this, as I tried to say earlier, I'm not sophisticated yet into say, okay, open interest did this right now, so I am actively changing my opinion into that direction to flip-flop into the other direction, it's more like observing and learning from this and seeing if this is more a forecast and also a more fine-graded option to where price has still room to fall based on the leverage that is also seemingly responsive to super basic TA, because if you see this super large trend line here, that's like as simple and basic as TA can get. You have a fat ass line on the chart. You have an air gap here, so it's not super, it's not super rocket science to assume it has room to fall here, find a footing, or just tap it quickly and then bounce. Same as it respected this line. So this is one data point, let's say, or one thing to look at, and I enjoy meanwhile looking at. And then on a separate data point is the heat maps. So I'm not really matching them. They are just like two sides of the same coin, probably, because it's all about leverage. But if in other words, I cannot take an entry based on open interest, but I can take an entry and an exit based on the heat maps, if that makes sense to you.
Yeah. In the end, I forgot your premise that you just mentioned, that you're just looking at this to trying to understand a little bit better, but you're not acting upon this kind of information. Yeah.
Yeah, exactly.
So liquidation has plays more a bigger role in the decision making. Yeah.
Yeah, especially if you have something like this, open interest. Open interest tells me indirectly that there's too much leverage in the market, as we can see how it's unwrapping right now, and that this is very good and extremely healthy to go higher. But it wouldn't help me anyhow to decide Sol will visit 198 or 189 or not. So it's helping to draw an overall market image of where are we in the market. If I had to name anything, that we are super bullish here, everybody's long, and this is probably not sustainable, and eventually it will come down. I was just too early again when we hit the all-time high here, and was like, yeah, shit has to come down. But yeah, market euphoria does what it does, and it holds longer, and people long more and buy more, and eventually it fucks over in a very quick and short period like it is now, which is actually the better way, because crashes like this are much easier to handle on the indicators for the resets than if you have a super slow bleed down, a lot of up, down again, up, down again, up, down again, because every time you go a bit up, it opens in all indicators the option to go even lower. So if anything, you want this devastation, especially if you're in a short, then you're like, yeah, give me more money very quick, and you get to your long entries better and your short exits better. But also for what can happen afterwards, you actually want this pain, because we are so oversold here.
Yeah, that a swing is happening. We're waiting for a swing, right?
Yeah, that's why we're talking about layering into large swing positions. And if the steam runs out here into the resistance, I don't know, here or here, we will see. And we may draw conclusions about a reversal, then you are so deep in the money already that you can sleep on your position, partial TP, take out half or all of it, whatever, depends on how you want to manage your position and add back lower. Yeah, you want these crashes because the chances of getting some form of bounce are super huge. And if you then consolidate, you open again up for going then actually higher. So it's just perfect what's happening just now, given all market factors, macro, seasonality, and the quarter. That's also when the biggest institutions are repositioning their whole folios. So that's probably also a reason why we have such large sell-offs. Not only the long flush, it's just so many things come together that this action right now makes perfect sense. Post rate cut euphoria, you name it, yeah. And the things that are drawing out here on the money flow right now is exactly what I love to see. Not only was most of the holdings sustainable after the breakout, so the line, I guess, was somewhere here. So we are basically still consolidating over the breakout. Let it dip a bit lower or not, for all I care, but most of the consolidation happened here. while the price is falling drastically. And right at the end of the price fall, where we are all trying to min-max our long entries, and I'm certainly
Yeah.
doing so, that's when all the people are selling. And this is like, yes, that's chart porn. You want the biggest idiots to sell at the lowest prices because they can't take it anymore. That's what you want, to find those lows, because as stupid money is selling here, maybe a bit lower, whatever, that's when the chart reverts. That's just always how it goes, because it's a null-sum game, and you can see already 300,000 more sold than bought. It's already like a tiny bullish divergence because price didn't move at all. It's basically flat in a super tiny range, yeah. So these
Yeah.
are already first signs, and those definitely help me to make a conclusion about my trades. Because if we were like falling on the price and still only grinding up, then I would be like, somehow there's not really panic selling, so maybe we fall even much lower before the panic selling actually kicks in. So this is very good again, another confluence point why looking for longs here and nearby, to me at least, for a larger swing play makes a lot of sense. Not saying we cannot go lower. I have more limit orders lower. Can it go to 170 or 153? Oh my God, maybe. Yes, can. Anything can happen. Is it super
Yeah.
likely? If it does, it would be super annoying for me, but even then, I would not sweat on my
For a lot of
position.
people, I guess.
Yeah, yeah, 100%. So it's a game of chances, risk management, not being too greedy, and have at best double your position size for an emergency cushion in case shit really hits the fans. Because
Mhm.
the example we had previously, before I go back to this, are we good with this dashboard now? I can share this link later, and also a tutorial if you're interested, where they explain how to set up a dashboard. It's super straightforward. It's for free. You can try to get used to it and then make your conclusions and learn something from it. Yeah, at least that's
Lovely.
what I use. So,
Yeah, yes, please.
okay, cool. Then I would just switch Windows again. So, what was I about to say? Yeah, exactly. So, still regarding the layering in. Let's say price just does this. No partial TP, no whatever, full position is here. I personally wouldn't really like to add emergency funds nearby, because that's then not you making emergency funds. Emergency funds, then you're just greedy, because somehow you had a plan that was justifiable and very good, and just because price fell a bit lower, you just got greedy, and that's also a huge red flag on the don'ts list. The do's are patience. The do's are making a plan up front, sticking to it, and if price is acting in your favor, then it allows you to play a bit with it, but not to be like, I just add more gas to the fire and add more fuel to the fire as soon as possible, as soon as price goes even the slightest below your entry. But if you have your position here, or if I have my position here, and we indeed if we go for the 170 leverage before the Powell formal speech of rate cutting, let's say here, yeah, we would probably find something, a reason to bounce here as well. I personally would add emergency funds also really then in those levels, because that's when they get interesting. When my entry is here, entry average, something like this, and I add here, then my new entry is this. So chances for going from here at least back into here and get out, remove my emergency funds, and even end up in profit are much higher than if I add them here. And then my average entry is here, and then it does this anyway. And then you are like, oh shit, do I even get close into the bounce back because my entry is here? So I guess you see.
Would you cut your losses? Would you cut your losses in this case? Meaning that you have something deployed, and if the leverage is relatively contained, since you're waiting for a swing and you're not scalping, would you just say, okay, I'm 30% down. I just might bite the bullet, cut the loss, and then reposition myself with higher conviction lower? Or would you just let it bleed and tap onto the emergency fund, which is a one-way, only once card, let's say?
Yeah, good question. It really depends individually on each and everybody individually's risk management. In best case, I don't want to bring myself even into the position of needing the emergency funds or any the emergency collateral based on my account margin. But if it happens, it's more likely that it's like a super strong macro problem and or a doom wick. And depending on those factors, I would probably make my decisions. I could not tell based on this individual example and say that's your receipt every time, because it unfortunately depends on too many things why the chart would be unnaturally just doing this from here after all of this.
Yeah.
So there's no perfect answer to this other than in best case, you don't bring yourself into the position, but if you use your emergency funds, take them at least out at break even or at the new entry average. And if you don't use them and if you don't have them, then you are even more incentivized to structure your layering in better. It doesn't need to be like this. I mean, in my opinion, we are looking for a low nearby, so it makes sense that my entries or my layers are closer to each other. But it's also perfectly fine if you have something like, let's say, this and this, there's absolutely nothing wrong with this. If the chart fucks over like this and you have only 40% of your stuff deployed here, then your entries here, and it goes to 180, then you couldn't have a better sleep just being like, yes, go to 180, give me that entry, and then your new
I'm hungry for it.
Is like, I don't know, and your new entry average is probably somewhere here, while everybody is in tears crying like, oh no, what's happening here? And you're like, yeah. So perfectly fine. It depends on your collateral, your margin, your risk tolerance, your desired position size. You can also only have like half of your desired size every time, and your emergency fund is actually the fund that you would use if you reach your total position size. I know there are a lot of people who are super conservative. I know there are a lot of people that are large gamblers, or have a higher risk tolerance, let's say, to be polite. So there will be people who play this like this, and this is okay. It's as much justifiable as playing it like I'm trying to play it, at least. With this,
Yeah.
And if you play it the other way around, that gives you more options for then have your emergency cushion like here, So
So let's hope not, man.
Like the largest patience usually wins. If you're
true.
If you're staring at the 15-minute while everything is dying and you are like, okay, this is a low, I add $1,000 and then another 1,000 and another 1,000 and another 1,000 because I did those things before. There's nothing worse. And even worse is because we didn't talk enough about the don'ts yet. So let's do that. Because the do's are easy. It's patience. Have a plan.
Wait, do you need
No other
help with
way around.
homework?
Yes, I need help with homework. Have a plan before, then patience, then stick to it. Period.
You want just all right? Hold on. Let me get Let me get. I'm gonna get a
Piddleton,
snack,
can
and
you
then
mute
I just want to hear what your homework is.
He's not talking to us.
to us? I think.
Who is it?
I'm not even trying
Yeah.
to help you. I'm just trying to figure out
there
what it
is.
is.
Okay. Sorry. I actually thought he was asking something. What I was about to say. Now I lost the track. The don'ts. Yeah. Because don'ts are usually driven by either fear or greed, and we are humans, so those emotions are legit. You get the entry here, your first layer, and then price goes like this. One classic don't, and I did those before, which is why I basically know why they are don'ts. You somehow get impatient and throw your plan you made up here or here over the border, and you just add right away this layer here. Even worse, like higher, because price, the 5-minute candle just popped up and you're like, wow, now we're going. And then you add your $2,000 here, and somehow you end up with an even higher entry with already 40% of the position size. And then you are like, oh, wait a minute, price is actually doing this now. So I'm gonna add all this layer here because I used my prior layer already up here, and you feel like,
Hey there.
hi there, and you feel like price is going lower, so I need to add something, right?
So
Price is going lower,
I
I need
just
to add
returned
something.
my
So
wife's phone. It was supposed to be returned. We got it, and they sent us a little.
So okay, muted the guy too, and then you're like, okay, yeah, I have forgot everything I made before, and I used my second layer already up here. Price is going lower. So I add my last layer actually where my second layer was, and then price does this, and then you're like, what the fuck, man. So this is a classy don't, especially when price is like fucking around a lot in the same ranges, and it gets it's really challenging for the patience skill, and I made a lot of mistakes those in the past. I don't say I am perfect about them at the moment still. There are still room to improve, but on a base principle, this is a don't, especially if this is your first layer and then the price goes up. Make something like this. And it gets worse if you then start doing something like this, add your second layer here. Then it goes here, and then you are like, okay, now I add my third layer here, and somehow your average is, I don't know, here, and you're like, okay, what the fuck, price is 196, and after all the short time frame indicators have reset, then you get the next wave of rollover, and actually it goes to all of your prior layers desired. So I can only preach, don't do that. Try to stick to it. The hardest part is really scaling in, knowing when the price is actually in a reversal. There is also no good answer to this. You would at least want actual reversal signs from all the other TA we know, like range, like trend breakouts. Let's say we have this, and price fucks around here. you didn't get your third layer, which is, let's say here, you already built the first two because price did something like this, builds actual support, hit your second layer. Eventually you get a breakout, you start to form some uptrends, you hit major liquidation, whatever adds to the confluence of usual justifying a long. Then eventually you could try to reshape your idea of, does it make sense to be stubborn about wanting this additional exposure so low because it didn't play out and markets don't always do what we want. But what can I do now with the more likelihood of price maybe deciding to do like this and not missing out the whole move with all my position that I have untouched, because now you're 40% positioned from the 100% you allow for yourself, but it already looks like there is a reversal ongoing, and you feel okay with adding some more. So that's where it gets a bit more tricky, but you would at least want to really wait and have the discipline to wait for justifiable breakouts, something like these trends. For me, it would be certainly something on the 4-hour time frame of my 4-hour chart. So there's like nothing that justifies here. Obviously, we didn't go up yet, but if we get those breakouts beyond those local trends, reclaim the macro trend, reclaim those local trends, maybe then take the largest local trend, then get a retest. Something like here would probably justify for myself, okay, it's more likely that we found a bottom and missed my last layer, and I can allow myself to add at least a bit of the unused collateral, because I'm fine if it falls again and I didn't do it perfectly, because my last layer didn't hit. So if I have 6,000 open, but trend did change and it's not a wake a wish foundation. There are no obligations that your limit orders have to hit. It's perfectly okay when the chart goes to new all-time highs after you miss out. So you can allow yourself to then add on actual reversal signs and reclaims and all the things that we like to see in the charts to justify a reversal, to then add. I don't know, let's say if you're playing super safe and it does something like this, goes here, 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 and then does retests and consolidation about 270 before it would take off, maybe you can justify adding a bit of your sum to this to try to take the rest of the ride up of the largest, So very complex topic, very easy principles if you're just putting your limit orders, have a plan before, but trades really start to be, if you ask me, interesting when they are running, because that's when you have skin in the game. That's when you're either making profits or losses, or you can improve your future profits, etc. Because making a plan before is actually very easy. You just look at some levels, you put a limit order in, and if they get hit, cool. If not, yeah, then not. But if you're actually actively in a trade, that's when the party starts. Yeah. So that was a long rambling and monologue about layering in. Layering out, I guess I touched it a bit. Same idea. You can play around with partial TPs, play a range, put it back in, partial TP, put it back in, whatever, until it leaves. And then at best you have numbers already in your mind where you take those partial TPs or eventually fully TP. So if you're super conservative and look for a smaller swing, maybe this is your area, or 217 is already your area for full TPs. If you're looking for all-time highs, then that's what you're holding then for, but then you also need to sustain everything in between, you know. So always depends. There's no perfect answer to this unless you're playing straight FIB levels. Like, okay, that's 1, the entry hit, that's the 1.618, and that hit, and that's when you TP, and couldn't get easier than this, then that's also fine. I mean, is anybody really complaining if you got the longs to 247, but you didn't squeeze to the last pennies out to 253? I don't think that's something worth complainable. It's an absolutely nice long if you catch that and made it. So. Yeah. Questions? Let me open the chat, or anybody speak up, please. I lost a bit track of what questions were.
Did you record this, Lou?
Thrown in
It's
between.
Apone. Did you record this?
Sorry?
Did you record this?
I hope so. I did the start recording button. It still says it's recording.
I've
Yeah.
only been in maybe like 15 minutes, and I didn't know if you had it. But if you do have a link for it, for sure, I want to get the earlier stuff too. I appreciate you, brother.
Yeah, sure. No worries. Thanks for coming so plenty. I love those sessions. And if you have questions, just throw them in, shoot them. I try to answer. Okay, let me check the chat then. What everybody's thinking. Oh my god.
You said you used the cross margin, right?
Yeah.
What is your collateral initial?
That's nothing I would like to disclose, honestly.
Okay, but do you like have Bitcoin as collateral or Solana as collateral or USD?
Sorry. Okay, I thought you want. Oh, how rich are you?
No.
I only use stablecoins since last year. I'm just stacking cash.
Okay.
And all profits roll into cash. And yeah, I'm just waiting for people selling their houses and credit defaulting and so on before I buy assets again.
Okay. So you never use isolated trades?
No, not really.
Okay. Why is that?
I like the idea of the flexibility of using my total account margin, also that all my trades can hedge each other. So if I have a position that's big in the money, then I can use that position, and that's how you get a total market, house of cards, and cascading liquidations, obviously, for the same idea, playing Wong. But basically, if I'm in the money on a position, say a short, then market keeps crashing, then I can start looking for long, and those positions are hedging then each other, and then I can make subsequent decisions with this.
Okay. So the funding rate from the short goes to the long, or vice versa.
Yeah, if I have a short and a long open, then I usually get paid from one side and I pay for the other side.
Okay.
But I mean, let's say I have a long, and I can just draw it out here in the chart without all the lines. Let's say I have a long, but I'm quite certain that 217 gets a rejection because there's all the leverage, it makes a tiny break up, and then it rolls over. But I don't want to close my long. I can just take a hedge short, call it that I'm protecting my long, and don't change my long at all, you know. But if I short here, let's say I have it again, $10,000 position here, and I short for 2,500, 5,000, whatever, here. It keeps running. I'm still bigger in the money, given my long position is bigger than my short. Then I obviously should make a decision eventually if I want to close it short, if I think the chart keeps running, or if I add more, if the chart just takes the next high and I was just too early and then it rolls over, and I double my short here, go from 2.5 to 5 here. Technically still I'm long, but I get the opportunity to get into a long, hedging my long, and play the side of going a bit back down, making profits from the short without changing my long. So I don't need to sweat over TPing my long and adding back to that long, because if I TP my long here and I don't know, add back here, then my entry also changes, which is annoying, you know. Also not a big deal if the chart then does what you want it to do, but I like my entries low or my short entries high.
Okay.
So
In that case, would you use the profits from the short to layer in the long?
no, that's just then raw profits, and I take that
Okay.
cash and let my account grow, or consider a different assets. You know, there are so many assets, and take that opened up collateral to then play in another asset that is about to hit 4-hour hold or whatever. Has so many ways to play these things.
Okay. Thanks for sharing.
Yeah, sure. So that's the basic idea. All open positions hedge each other. On the downside, all open positions, if going against you, all put weight on your margin, and that's then how usually people get total account blowouts, because if they see this shopping opportunity, or let's be honest, they probably longed here or here, then if we stick to the $10,000 size example, I know it doesn't sound like why would anybody do this? But yeah, there are so many market participants, and the money does what it does. So if you have a $10,000 desire here, let's pretend it was a good idea to do this for whatever reason, or here, justified. Then they open a $10,000 position on Solana, Bitcoin, Sui, ETH, Hype, Ina, whatever, and then they have a lot of seemingly okay entries with so much used up margin on their account that's when you get the cascading liquidations. All price assets go down, all their positions go against them, and eventually all their cross margin is used up, and all positions get a forced closure, and that's then how you get cascading liquidations like this. So if you trade multiple assets, you want to spread your total margin like $2,000 to, and not 10, 10, 10, 10, 10 if your total would be 10. So sorry. Yeah.
Have we done a session about hedging? So that will be quite interesting.
I don't know. I guess we talked about it every now and then, like today, but not really. I'm not sure. Would have to look it up, or if anybody can tell if there was a live session, longer hedging talk. I mean, the there are like two base ideas for hedging. You can do to not change your other side, like I just explained. So long here, you open a short here. What you're doing here, if you're in this case, I would want to maintain a long exposure. So the base approach would be to not take a higher position size short here than a long here, because when I have 10,000 here and open 20,000 here, then I'm technically short, you know, because for every dollar up, my price, my short runs 2 times fast down than my long runs up. So if you
It's pretty good. I'm kind of exhausted.
So if you want to maintain a long outlook with this approach, longing here, shorting here, then you would have like 10,000 here and you'd be like 2.5, maybe 3, maybe 5. Again, depends on your risk appetite. And open it here. And if it then goes lower, then you are like, yay, happy days. I just TP my short wherever it makes sense to me and have all these profits. Or you can also use it if you're so stubborn, your third layer didn't hit. As I said, there's so many ways to play this, and I try to play around with all of those. That's why there's no perfect answer to every situation. If my third layer didn't hit yet, but I'm like, yeah, it was so close. Price did like this and reverted immediately before all those higher time frame longs activated. And I have other good reasons why a reversion here and a fall down lower is very justified. Then you could also use this short and let it just run through your long entry and then actually just close it somewhere where you're realistically expecting a low to be found. Or, and that's where the tricky part starts, to make those decisions, because we want the profits, but we also want to manage the risk. Or you just do absolutely nothing about the short ever, unless price really runs really, really crazy and you are super convinced that, okay, it's an actual trend reversal. You could actually, and I guess that's what Sin also just did with his long and then opening a short at 214, I guess, and 221 also. I don't know if you close this. You just use a short to hedge your long, but the whole risk of your long. So look at it again. If you have the 10,000 here and the 5 here, and price just does this and this, and then it keeps falling lower, then because you have 5,000 here and 10,000 here, you are technically only 5,000 in a long, because the delta between the 5 and the 10 subtracted is 5. Obviously, your long now runs faster into the negative than your short gives you profits, but that's how also actually hedging works. You're lowering your risk of your long with the short you keep open. And then, I don't know, your third layer hits and eventually price runs back up. Whoop. And then finally does what you always were looking for. And then it runs. And you never took any profit on the short. And you just let it SL at entry or, I don't know, closely below just to make up for the fees. And what you did here is protecting your actual larger swing play idea, because we are still aiming for the moonshot, like always. You just protected your long while it could run against you with the short, giving you more opportunities to even layer in more or higher or both, basically, because you had the short, you're technically less long, and yeah, you just have more options, and that's the base idea of hedging. You could also TP your short here. If your account margin justifies it, you're like, yeah, I'm just schlonging. I'm playing the long as my initial plan. Price did something different. I can justify a short here. I can justify TPing here because I'm not sweating. My collateral is perfectly fine. I have a huge mattress. In case something is, I can add still my third layer here as the base plan was from days and days ago or weeks. And then let the market just do its trolling and chart do its thing. And then you just TP your short, take all those profits with you, add your third layer, and then the price then takes off, you know. So yeah, it gets even more complex if you add hedging. Usually I would not recommend hedging for beginners because it can be confusing and there are so many more don'ts if you do hedging. You really need to learn this or play with sizes up front. Because what also can happen is that you do the inverse, you long here and you short here, you're absolutely dirk digging it. Do the inverse and then the price goes like here, you add to your short, your average goes here, but you also add to your long, so that average goes here. And eventually you have so many large position sizes that it's very likely that you, I don't know, get a wick down, you get your long blown out for some reason, if it's isolated or your whole account or just like this. And I don't know, there's like no good path out of these usually if you are not brave enough to just close all the positions or know how to manage them very well individually. So if you're hedging, please be aware of the risks it can have because of more skin in the game, more decisions to take, more options that are available in general, because now you're not just looking for longs, which is usually the safer bet on the largest time frame because inflation drives all asset prices up, even with the bear market. An asset price can only fall by 100%, but if you are starting to hedge and short, an asset price can perfectly run more up than 100%. Eventually, Solana will go here. Is it this bull run or not? We don't know. Probably not. But as you can see, it's easy for Solana or for any asset to double, while it's not easy for any asset to fall more than 100%. So if you had shorting and hedging, just be aware of all the psychological and emotional implications given the multiples of options and decision making you have to be more sophisticated about to then also do. It's not like you just do it and then whatever, I just let it run and it's gonna fix itself. No, you then also have to make those decisions depending on how the chart develops. So I do it. I like to do it every now and then, depending on what happens. But if you're just starting out, you're, I don't know, still 10x longing here, then it's probably not the best moment for your journey to already think about the hedges. Yeah, so that's on a baseline. Yeah, sure.
you have questions, throw them in. Otherwise, I'm just rambling, and you can write books about it. Maybe we do another session. Maybe also Sin give his insights about it, because now you only hear mine, and yeah, he's perfectly a giga brain. What all trading, so would also be interesting myself to actually hear how he approaches hedging. Otherwise, let me check the chat quickly. Oops. Yeah, OBV. Yeah, I'd say it's already like we're just hitting midnight. I know the OBV in the live questions forum for a different session, but it would basically be too much for today. Address OBV indicator.
And Blue, sorry, may I ask you to unmute Grimar in the chat? Because he's asking in the chat since a while to be unmuted.
Yeah, I didn't get that far in the chat yet. Sorry. That's why I
Thank you very much.
need a host. It's hard to do all at the same time. Sorry.
No, I appreciate it, man.
Yeah, thanks for the hint. Sorry, Grimma, but there was like a lot of background noise. So.
Yeah, no problem. It was good that other people ask some questions.
Yeah. Okay, let me read if there's anything. Okay, yeah, VWAP also a big topic. Maybe I can do a combi session next of OBV and VWAP. So let me add that also. I mean, base ideas are super simple for all of these, but as I'm rambling or questions come in, then the sessions definitely will get a bit longer. So I will just Chase, can you just if you see still in the session? If you're still here, can you just add this to the live stream questions? Just as how you had those bullet points of questions, it would be appreciated. Yeah, thanks, Flingwinger. Sure thing. Also appreciate all of you guys taking your time and bringing life to the server and to those sessions. Never mind those live trading sessions on a regular basis every week, despite the little summer hole, would be so welcomed, well visited, growing, full of questions, participants. Really like it. Also helps me learning. Explaining things. It's always like manifesting them more in your own thought processes. At least that's how it is for me, because explaining it to others helps me to really mean what I think and then say it. It's different when it's just a big cloud of ideas in the head, unsorted. So yeah, it's a win-win for all of us.
Blue, I think that we should be the one thanking you for the content.
Agreed. Yeah, very insightful.
You're welcome.
Yeah. I got to go. So thank you again, Blue, for sharing all this. And goodbye to everyone. And see you in the chats.
Yeah, thank you too. Have a good one.
Ciao, ciao. Bye-bye.
Bye. What lows do you see for Soul in the Bear? I'm asked by Evil Pig. It's anybody's best guess. 2 digits is, yeah, pretty much in the cards. Always depends on how high it goes. I don't know if we do the absolute merged trend line hit of $1,000, which for the sake of the example, it's bananas, but let's say it does it, then going to like $80 is not very likely anymore, because that's when also super high time frame support will show up here with volume profiles. So yeah, if we do super crazy shit like this, and you also get even on a 70, 80 or 85% retracement, you would also only land somewhere here again, But from all the higher time frame shorts that are active and didn't play out yet, coming from all the structure here that they were created here and they got activated while grinding up. We have plenty of shorts targeting 150s, 140s, 144, 120, 122, 120, 110, 83, and 76. So that's as far as I recollect and as close as I get. More answers in sin.csv file, I guess. But yeah, I don't really expect to hit 1,000. So if we get a new all-time high, that's already cool. We have the long to 289 from the 18 weeks. So that's extremely exciting. Same as plenty of 247 longs from all the 3-digit dailies that got activated here from the down here and up here. They are getting activated at 189.30, or on my Binance feed it's 188.20. To go back to 247. I guess we are going higher given all the factors we talked about a lot, and again today we can also justify it with that 18-week long. Yeah, and then we are so close to all-time high. Are we really not going to take it? I don't know. Maybe we have a trolling double top, and then it acts
Another
actually
16-inch
hammers
package.
but
discount 349 a blade, but he's getting 12 of them. So that kind of worked out.
I really don't know what the high will be. We will have to be all excited together and then see. Maybe we can draw some range trends. Maybe Sin can also share some more crafts of those, because I'm certainly worse at nailing top prices. It's much harder for me to just preemptively say, yeah, that's where we get the top by a raw number up front. Other than while we are developing into it and doing all these things and make like this and get a bearish divergence on the daily or even weekly, then I'm your guy to saying, okay, the top is probably here. Same like for all the Bitcoin top calls I've made. These are the things that I will look then at when we get there, and then chances on them are like, yeah, okay, invalidation is this, but chance is much higher that we have top here. Same as for like Bitcoin, invalidation was monthly closure above 125K. We didn't get that, and yeah, we see where the chart went ever since. So you can put chances then on there when we get there, but I'm not so good at making preemptive claims. But for the sake of the example, let's say we go to, I don't know, 400, which would be super cool. It's a double from here. Yeah, then I also don't have I guess I don't have a big problem seeing it still go below 100. I mean, there are so many large buyers at the moment. I know the FTX escrow was bought for 110. This is basically the reason why the low in this 8-month consolidation was 110, because all this escrow was bought during this period here, and yeah, large players didn't see themselves having their just bought escrow falling below their buy up prices, and that's also when that low was absolutely nailed before running all the way up. And so huge institutions buying absolutely matters. Otherwise, we wouldn't print those bullish structures, because if there was no buyers, no reasons to buy, then I don't know, you would have maybe just made this and fuck around here and not print all those justifications to run up. So yeah, it's hard to say. We got to see, but below 100 is definitely not off the table, given even the fact that we run to 95 during a bull run. You know, I mean, it was tariffs and blah 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 and macro, but still technically it was an uptrend. You know, if we check the weekly, just put some basic indicators on.
Do you think we will extend the 4-year cycle?
No. There's probably no way. There's just so too much money also in the market with unrealized profits. If everybody gets rich, there's like no good way of sustaining this. You know, also the major indices refuse to roll over still for a good chunk. So this is like extremely concerning shit we are seeing here. I don't know what. Yeah, I don't want to see happen. I don't want to see what happens and how quick it happens when the S&P reaches something like 7,400. Yeah, it's super parabolic. Just a tiny COVID-like dip to buyback hit, like, what was it, like daily shit. Where's my real chart? Yeah, it just absolutely nailed the macro trend, the VWAP to the penny almost, and then just immediately up, and then just cringe into, yeah, pretty bearish divergences while grinding up. Price is true, so people making money, or everybody is rich now. Even got a breakout here. Absolutely bananas. So probably time to engage a parabola soon. Maybe get the breakdown here. Get a last shoot up to something like this. And when those roll over and the tide leaves, then we see who swims naked, is the saying, I guess. And yeah, when TradFi is just cashing out after this absolutely tremendous run up of infinite gains non-stop with tiny chances to buy actually, if you didn't manage to long every dip and just up your stop loss or wait for this, and you know, it's like parabolic almost like since forever, or up only. And when this tide leaves and you get the breakdown, first angle, roll over, then revenge bounce, hit, maybe another bounce, roll over, counter bounce, rejection on the low, something like this. If not so drastic maybe, and not that exact period, but from a base idea, is that's when the market actually rolls over and you get a slow bleed of 12 to 18 months. Because this year was just a panic dip, you know. Media was hot, tariffs, world ending, Trump goes crazy, media helps about spinning the wheel to panic, everybody sells, yeah, and then you see what the price does. It just gets bought up and runs even 10% higher already. So that's not a bear market, that's a flash crash dip, and the bear market's yet to come. And when that money transacts back into cash and the dollar then actually picks up its pace because it's perfectly sitting on this 17-year-old trend line, or 14 years, what was it? Yeah, 17 years. You know, it's just hanging around here, just chilling. Yeah, I'm the dollar. I don't harm anybody. But that thing will harm a lot of other currencies. I know media is big on telling you otherwise, but the charts are, if you ask me, very telling about the higher time frame move. When that starts, again, anybody's guess. I mean, Forex trading is super slow, can take ages, but eventually it will just whoop, fly back up. And yeah, what happens when currency gets strong? That's when assets get weak, because safe haven is the dollar after all, not Bitcoin, not the S&P, not Nvidia, not Google. It's the US government and its military and stablecoin and really, global currency, global reserve, whatever. And yeah, if you get fiat decision or inflationary price or inflationary value, wait a second, disinflationary value, then you will also see asset price disinflation. So no extended cycle, maybe a bit longer. Can it end in January, February, or already in November? Anybody's best guess. We will know more when the candles print, you know. There are good reasons for all of these seasons to be good or bad, one or the other. We have second rate cuts in October. Usually you have in recessionary territory, which we are currently navigating 4 to 6 weeks after the second rate cut, before the tops are made, and then the bear market starts, because the bear market starts from the top, not 50% through. And yeah, that's a good argument. Same as, does it get delayed? Do we get a skip? Do we get the next rate cut later? Yeah, there are so many macro factors. Do Ukraine and Russia randomly get a peace deal or an honest ceasefire? This would make the charts go absolutely bananas. For sure, if there's like a reliable reason to believe that we get this peace in that war, that would take huge loads from the charts or pump reasons, let's say. So yeah, anything between November or December and then January, maybe February, that would be already super extended, is justifiable. But behind that, oh my god, already betting behind December is very brave, especially with the yearly rollover and the shenanigans large institutions have to do their locking in their gains, rebalancing for 2026. When they do that rebalancing, I'm not sure if they want to rebalance afterwards back into assets, you know. But we will see. The candles
Interesting.
will, in the end, tell the truth. It's just guesswork. Anybody who's convincingly saying, okay, it's November for sure, it's December for sure, it's January for sure, it's just nonsense. We will see when those candles print. Hey, who knows? Maybe the top's already in. Not likely, but possible. So that was a very long answer, Evil Pig. Can you ask to unmute? Not sure if you discussed this earlier, since Burning Chimera asks, do I have a preferred liquidation site services that you think have more accurate or credible estimates than CoinGlass. I know of Firecharts and Trading Different, but not sure they're worth paying for. Yeah, definitely Trading Different. I don't have an active sub because I follow some channels who are sharing this thing. Sometimes would be cool to know myself on the fly, but so the difference between Trading Different and something like CoinGlass is basically the accuracy for higher time frame leverage. So if we are going onto CoinGlass, or you go onto CoinGlass, then you can usually only look out 3 months into the future or into the past. And there's definitely like positions that are older than that, you know, like April, you will have shorts that opened here. That's all like, yeah, I don't mind a 1.5x short from here. Yeah, and now you're liquidated, you know. So you don't see them on CoinGlass. So that's where Trading Different would be much preferable. And I was thinking about making a sub. I guess it's $60 a month. But as I said, given that people I follow share them anyways, I don't see a reason why I should pay for a service that I only use then rarely. And other than that, for short time, quote unquote, shorter time frames, so far CoinGlass was perfectly fine. So, I mean, I monitor all of those time frames. If it's 12 hour, 24 hour, 3-day, weekly, 2 weekly, 1 month, 3 months. I rotate through them every day, at least once. And then depending on what I'm looking at over the day, switch or rotate through the other, through the lower time frames. And I cannot say that it didn't do me well, but I guess a paid service would get you even more accurate numbers. So if you're trying it, maybe you can share your experience. But personally, so far, I don't feel like I'm missing something that actually adds value to my trading decisions, because that's a higher goal, you know. If I would pay for a service like this, I would at least have that money multiple times out immediately every time, without making decision fatigue of using another tool, because that's also something to, I don't know, if you have like 50 indicators, try 20 websites, eventually you have so much data and so much information that you end up not making any decisions about any trade, because you just bring yourself into decision-making fatigue. And so I eventually, I don't know, 1 or 2 years ago, started being much more cautious of new things to add to my quiver as per arrows I want to shoot with, because this data point says this, and then this says this, and oh my god, the other one says the opposite, and then price moves all the time and you don't take any trades. Schlonging, blue is pretty good, agreed. Thanks. Yeah, live Skype sessions with EvilPick. I mean, what is there to understand? If you are just trading the FIBs, then the entries and exits couldn't be more clear. At best, you trade with the trend. The trend currently is down. So if you can find shorts that are built, let's say we have the 3 versus 3 on the 4 hour that I'm eyeing with. If the price comes up and hits 208.50, I want to short it to, what is it, 203.80. That's the scalp. because eventually you get the relief rally, it will go here, we'll test this. You're technically probably still in the downtrend, yet to be defined. So you have just a very high chance you are shorting on a FIP entry to a FIP exit with the running trend. And this works the same on lower time frames. You can cycle through these here, you know. There's 3 hour, didn't even hit yet. It's below the daily trend resistance. You know, that's an easy short. It's just $1.70, but money is money, and you know that's a whole level. That's a rejection, a possible. You are with the trend still. Chances are good you get a rejection here and can almost blindly scalp this. Put a limit order here, preset TP here. I can do that on Binance, for example, and it's also how I do those scalps every now and then when I don't do them manually. That's all there is to it. If you really want it live, like while the chart is building, man, that's very hard to do because what if the price stays flat like just now? I'm not really trading this shit, you know. I'm not like on 3 or 5 minute charts that much. I'm only on them if I'm having like a 4 hour or daily goal, and then I want a refined entry if I have like let's say let's take this example. Let's pretend for a second this was not a high risk long because it's only one candle. Technically it's a long, and eventually price will go from entry to exit from the 0 to the FIP here. But high risk, don't take them in a downtrend, either for it being a downtrend and B, that it's only one candle. You want at least one more accumulation candle, and then if price goes here, you take it. So, but again, let's pretend that's a long, and I then go on the minute charts when I, you know, want to find. Oops, sorry. Then I want to refine the hold level that didn't get touched yet on a lower time frame, you know. So something like this. So your actual entry would be 198.71, TP 201.87. But you might be more conservative and or greedy at the same time because you want a lower entry, which is then also a safer entry. And if price goes here, you can take this hold level, this 3-minute hold level, and use this as your entry for this exit. So that's how you can scalp and do refined entries for scalping. Let's see how the chart developed. I guess we only reached this and even lower without even going to the exit yet. But yeah, sorry. So there was the entry at least, if that was your approach on the 3-minute hold. But it's still at least better than this. And again, it was a high risk long anyways because it was only one candle. Now price does whatever at the moment. And at least if you lost conviction about that trade for the time being, you would have get multiple chances for an exit. Whereas taking this entry, not refined, but raw from 1 to FIP, 1.618, this gave you not a single exit ever. Maybe if you nailed this right here, and that's probably also where some algos decided to, yeah, fuck this position, I just quit. But if you take the refined entry, then yeah, you have more options again for the Skype. Even profits, you know, if you say, ah, fuck this, doesn't look like it's going there anytime soon, I just leave, and you even leave with some profits. So that's like the base idea for the Skyping, and this goes both directions. Yeah, but I would clearly also ask Sindot to make a live session about it, if anything, because he's much more sophisticated than I am.
What's the lowest time frame you use?
Sorry?
What's the lowest time frame you use?
Yeah, you can see it sometimes he even goes to the 5 or 15-second charts, not for entries. But I like them for candle displacements. But I use everything on the top here, even up to the 1 minute or down to the 1 minute. But not for Skyping. I'm not trading the 1 minute or 3 minute or 5 minute even for a trade I am trying to find a setup for. But if I find a trade on those 15-minute, maybe 1 4-hour daily, then eventually I will just rotate through the lower time frames to optimize those entries, because optimizations happen, if you ask me, on the 1, 3, 5, and 10-minute charts. That's where the optimization happens a lot for those Skypes. But I don't have a trade set up on those, if that makes sense to you. If not, ask, because it might not be obvious what this means. And the second charts, to be clear, I'm not crazy trading these. I leave that to the algos. But what I definitely like about second charts is my team view, my trading view hanged itself. Super laggy.
Why do you look for displacements in the second?
Sorry?
Why do you look for displacements in the second chart?
Yeah, exactly. And it's precisely the 15 or 30 seconds. The 5 seconds doesn't work so well because there are too many.
Why do you do it?
Why do I do it?
Yeah.
Let me zim my water. Just a second. So candle displacements are basically defects in the order book. And candle displacements are like gaps like this, or candles that don't have an aligned open closure, like these two candles. They are aligned, and so that's not a displacement. But this is a displacement here. You have this candle closure, and the candle opens here. So this is a displacement, and exchanges want to revisit those prices. Usually do them quickly with a wick, as you can see here, to fix the order book, because those displacements are carried on. How you say that? The price difference of the candle being here, not closing up precisely, is what is it? 1 cent, 2 cent? Yeah, even almost 3 cent price difference in the executed orders, in how the order book was completely filled in the order book, the orders in the order book, and how they got executed. I bet there's a better explanation for this. It could probably even ChatGPT give you. But basically, if you have these gaps, it's incorrectness in the order books of how price moved through these orders based on these candles, and BitGet is the most precise about this. This is why I only look on that one for those. And usually price has a huge gravity of revisiting those candle displacements. If you want like better ones, might be a better idea even to use the 30-second charts only if you're like super greedy on better information. Then you can use 15 seconds also and 5 seconds. Yeah, I'm not even sure why I still have it in the bar. I can actually also delete it just, but for the giggles probably. So yeah, this 3-cent price difference here and their displacement is a reason for price to also go back there eventually. You can see it also here. Like we have a huge air gap here, displacements, and price just ran away and eventually gets a revisit. And you can see those happen often just by very quick and very tiny or very fast wicks, and then price runs immediately into the other direction. This is a good example. Like here, candle displacement closes here, opens here, another displacement right there. And what does this wick do? Zack. This fixes this, and the prior one tried to fix both but couldn't, so we got a double wick. It's very fascinating. And if you really want to deep dive charts, that's your game. Candle displacements, fair value gaps based on this can also show up very well. But yeah, that's also where money is at. So we even have one here. So if I go to the right, I will probably see, yeah, this normal price movement here fixed this displacement here. So if you're into digging charts deep and refined entries, you probably should look into candle displacements, but only really on BitGet. The other order books are completely fucked. I don't know why BitGet gets so good and so right and gives good signals of actual revisits, but if, yeah, as you can see, if I check the Binance USD chart, it's like nothing but displacements. So yeah, I don't know what the theory craft behind it is. Some get it so wrong, and BitGet gets it so well that when they have one, it's a good signal for a revisit, if you know what I mean. But they have very little defects or displacements in their order book. And if they do, they eventually get a revisit. Maybe we have a more pregnant example. I mean, price followed lower afterwards, but this wick here was perfectly to initially fix this displacement here. Then he got the bounce. Decided to roll over anyways, but yeah. If you have a bot or if you're micro scalping, that's a 40-cent movement. Yeah, so profit is profit, I guess. Yeah, so that's what's happening a lot while price is moving. Just fixing order books, not trying to carry on too much difference between the orders that are executed and the orders that were in the order book. I don't know how it perfectly works, to be fair. I guess, as I said, you could read up on this and have like a larger paragraph or read up, but it's a mixture of the limit orders, then the market orders, then the spread, and everything in between, and then what happens there in all this transactioning. And for some reason, if they carry on too much displacements, That's like a stacking debuff of constant money loss stacking up. Yeah, because of how the actual transactions happened between the exchange and the market participants, the buyers and the sellers, are then like out of balance, because then like depending on which direction the current displacement sum up has, is that, yeah, let's say that Binance is then all the time selling 10 cents below market value, or is selling 10 cents above market value, or buying or whatever. So that's the base idea. And since they don't want that, they have a huge desire to fix this. So we can check if price actually wants to fix this one near term, or comes back to this later while we're talking. Because that's the displacement, same as this. It's super tiny, but it's still one. So eventually price will wick here. Okay, so that's your first fix. So this got repaired. Now let's see if it goes here. Repairs this one quick. No, not yet. TikTok. Okay, there you go. So yeah, this is displacements. And yeah, for the scalping, EVPIC, again, a long-winded answer with a lot of topics. I'd honestly would prefer also to have Syndot for a live session if he wants to do it. If it makes sense to really trade live on the chart while talking, it really depends on volatility. But I would also like to hear his insights. Other than that, he also released, I guess, 2 videos at least about Skyping, if I'm not mistaken. So maybe it's worth a watch to revisit. Yeah. JX Rock does an engulfment on the 1 hour guarantee 1618 target. That's a very good question. The statistics on entry to exit on the FIPS are above 89% for success rate. The challenge is to know when you want to take them. We have a read up on the different risk profiles of the engulfments. There's high risk, medium risk, and lower risk. We just had an example of the higher risk, and we've seen that it didn't work out yet, which is this 1 hour engulfment. It's only a single candle. And you're also longing against the trend. So that's like lose-lose setup. You want at least a range of 2 candles. I mean, this is not engulfing, but let's pretend this would be engulfing, and then you have a second accumulation candle. That's when you go into the area of medium risk, as far as I know. If Flingwinger is here, he could probably cite that a bit better. Otherwise, I have to try it out of my recollection. And the low risk, that's where I'm certain about, is like if you are trading on the front side, then trading the backside, which is a lot of trades that were talked about, basically yesterday and today. I longed, for example, this here. We have this untested for our long, untested for our hold, because you have the engulfment, price wasn't revisited to the entry yet and just ran away. So it created this whole run up as a front side, eventually creates a top, and then goes into this front side, and this here becomes the back side of this front side. And this is where you get your lower risk longs, or also shorts than in the other direction. You get your entry here, and you can see how accurate it even was. This wick barely gone through it, so that entry was very vicious. How large your size is then, that's theory crafting we discussed a lot about today already. So let's pretend you know the right amount and whatever you long here. And your exit would already be here. It's a very tiny long, like $2 and what is it, 27 cents. Not super tiny, but also not super large, but it's low risk and profit is profit, and those can add up really well if you make it through multiple assets, multiple time frames, blah, blah, blah. Those gains compound, and you can obviously play that in different ways. So usually what I like to do is, if I have something like this, I take the entry, take a tiny TP already before the exit, depending on how fast it is. I mean, in this case, it was relatively fast, but it is not always the same like that. Then it's the same game as mentioned before. Partial TP at back, partial TP at back, blah, blah, blah. And eventually it gets to your exit. And yeah, depending on if it runs into a big resistance or whatever, depends again. Full TP, because that's your safe exit. That's what the low risk FIP trading base idea and base principles are telling you. Entry, exit, no shenanigans, no fuck around, just let it run and wait is also fine. But you can obviously also be a bit more greedy and only TP, let's say 75% here, and take the rest of the upside here. So I played it even a bit differently. I partial TP'd, and then let the rest run, and actually then TP'd like most based on the 1 hour development here. So that's when you get like into advanced shit, it's a low risk for the actual entry and exit between the FIP drawn out. But you can play this in multiple ways, like as always. But other than that, if to the question, do the engulfments guarantee an exit? Yeah, according to the statistics, it's as close as 200% as it can get. The other question is always only when, because you are longing against the trend here. Not only was it risky because of a single candle, but also you have all the downtrends here. So you don't want to take FIP trades against the trend or against a lot of resistances in general. But eventually, obviously, the price will revert. So if you are not sweating, if let's say you have $1 million account and you make a $1,000 position here, you couldn't care less if the price goes all the way down here. Because eventually it will go back here and you still get your profit. So it always depends again on your goals, your account size, your approach, your risk appetite. Yeah, I didn't take it for the said reasons. High risk, one candle against the trend. I have a better chance of taking the same trade somewhere much lower, but still TP it here because, yeah, that's how you get refined entries on psycho level. You even get something much lower below the actual wick, just because you have the certainty of price going there eventually for many reasons, you know. So yeah, that's very informative. Yeah, those are the notes. Yeah, $26 Sol would be nice. Everybody wrecked, and then new logs. How about gold? No, I don't give a fuck about gold. Gold is only a factor for me to watch for what TradFi is doing, how they are positioning themselves, and gold also constantly hitting new all-time highs is a little bit weird, but also makes sense given how we're like going into recessionary territory, and it could actually explode even more crazy. So, well, I don't know. I don't really trade it. I know some guys are trading it. I know others are stacking it just for the good old have your heart metal stack in your retirement portfolio. I can see that. But yeah, not much opinions about gold. Not many, sorry. Yeah, so yeah, you're welcome, JX Rock. And if it's not super clear on that quick explanation, I'd say try to go through the educational videos from Sin again, because based on such questions, he created a playlist of raw education with shorter videos, and I'm kind of sure he even made a Skyping video and also base approaches for these engulfments and explaining these. So I guess, yeah, it's easier to come back to those videos. If it's not clear, then feel free to ask in chat or yeah, post a general question in the live questions thread again. I can leave the link here again if not everybody knows it. That's where you can post questions. Yeah, yeah, not much to add there. So, yeah, we had one more question. I thought about it, but I'm not really sure how to answer it. Grimma asked earlier today how to trade a future bear market with perps with different approaches. That's like the most general question one could come up with. Like, it's like, no offense, but I'm also trying to give a real answer, and the honest answer is you're basically asking how do you approach trading in general. Basically, like all trading you're doing in the bull market, just that the volatility is probably a lot higher in a bull run when the larger corrections and cashing out happened, and all the dumping is mostly behind us, and we are just going sideways in the bear market, and the volatility will go super flat, but you still get the same signals, you know. It's just that your FIB levels won't be so extreme. Like you have a FIB 18-week FIB level now from, what is it, 213 to 289. That's like a fucking $76 move. That's like insane. That could be like the total asset price of Sol during the bear, if not lower, you know. So, but the base idea doesn't change. So if you get a engulfment and get to the one, you can take the entry if it's not against your trend, or if you see trend race or cycling through downtrends and you get more than 6 counts and so on, and get a breakout, maybe you get a bit more of upside, but then that upside is not going from 190 to 350, but that upside is maybe going from 62 to $65. So the idea doesn't change, but volatility will just be drastically lower. I don't know if that answers your question, Grimma. You have to tell me later because you already left and said goodnight earlier. So if you're hearing this, let me know if that answers your questions. Otherwise, I have to think about it.
I have one more question regarding the engulfments.
Yeah, sure.
So the 1.618 level,
Mhm.
is that like a resistance level, or why is it always the TP level? I know it's like the Fibonacci level of just nature, but is there in trading like that?
Yeah, unfortunately, there's no good answer to this. If anything, it would be the funny one. Why are there
Yeah,
so many Fibonacci phenomena in the universe, in math,
yeah,
in how genes develop, on how chemicals interact, the whole Fibonacci drawings? You can see like the Mandelbrot Menge in German. It is how's that in
it's a really deep rabbit hole.
Mandelbrot? Yeah, the fractals. It's actually insane how many things are related to Fibonacci numbers,
Yeah.
and so it to some degree also makes sense again that it works with such a insane success rate and accuracy for trading. You know, like
Yeah,
almost in a
it's really
laughable way.
insane.
Sorry.
Yeah, it's really insane.
Yeah, yeah. So there's no better explanation to it. Sorry. I also didn't really try to dig into it, but it's also not really a very well and wide spreaded knowledge. When Sin shared those ideas, when I got to know him first, and he was showing up in the Invest Answers server, he made all those bold claims, and we were like, yeah, another newcomer who's wrecking himself and not going to be heard of in a week, you know, because we had a lot of those making those bold statements. And yeah, I got a crazy system here and infinite money glitch, you know. And then you never hear of them again. But yeah, now over a year later, you see what happened. We start to build our own community, and the system's actually fucking insane. So no idea why the FIPs are working so well. Just that they do, and I guess it's as good as I need to know. Does that make sense to you? If something has a 98, 99% success rate, like the bear moon and the full moon. As sad as it is, statistics don't lie, and those statistics are very profitable. So, does it really matter if it works when it works? Does it really matter why it works?
Yeah, it's so crazy.
Yeah, and also how late those things still prevail. You know, obviously those candles and those entries and exit don't always play out immediately. Sometimes they take a lot of time. I mean, the exit or the longs to 247 played out faster than the 4-hour long we just had it as an example coming from the left. So there is clearly a correlation between 1 hour engulfment or FIB will play out in a certain period that's reasonable within that hour scope, same as a daily or a weekly or 20-day or whatever has a higher likelihood of playing out in a prolonged period also compared to a 15-minute Skype. But sometimes also not, it's depends on too many factors of from where the price is coming and how much leverage is there, how much buying and selling and blah, 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 and what the trend is. But we know eventually they will hit. So that's the reason why there are bots running, trading this blindly. I mean, if you add one Sol here, let's say you have a capacity of 100,000 Solana to play with as your collateral or margin, whatever. If you enter one Solana here and just wait to exit one Solana here, where was it? And then you have still 999,000 and whatever Solana left to make more trades. Do you really give a fuck if this takes 2 weeks to play out? Not really, because all you care for is a guaranteed gain of 1.68% on a success rate of 98, 99%. That's a $3 gain. If you do it with one Solana, that's $3.30. But if you do that on 720 timeframes, which there are per day, as far as I know, if not more, and you do that for all of engulfments, do that long and short, those are compounding gains that are crazy. If you then fine tune that, maybe to not be overly short exposed because the risk is infinite, but be rather more long exposed, I don't know. Certainly something Syndot could also make a speech about how he designed his. Yeah, then you can optimize those gains definitely, and while lowering your risk, especially. Just need a pretty big account already to actually take also all those trades. Oldmate says, except when you get liquidations, when price runs away and you leave some behind and get fucked. Yeah. That's. I know you're just. I know you're still working on your bot and making progress there. And yeah, fingers crossed you find a good middle ground between greed and risk. Yeah, charts still look pretty fucked, huh? I don't know if you're waiting, if any of you still or is already in positions. But if there are not more questions, I would probably wrap it up here. We're going for 3 hours already, I guess. Give it another minute or two if somebody comes up with anything. Otherwise, already appreciate all your coming, participation, chatting, talking, all the support. It's pretty cool what we're building here. I'm very happy to see all people thriving, learning, feasting on the knowledge. So it's also more fun to produce more of this, All right, then. Doesn't sound like anybody has a question. Only thank yous. So, muchas gracias. Have a good night or the rest of your day. And yeah, have a good one. Thanks for coming.